QuickBooks Pro Desktop 2021 Tax Line Mapping Overview. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in a QuickBooks practice file. In a future presentation, we will set up another practice file from scratch that we can use to practice setting up the tax mapping features and see how to use them. But for now, we want to give an overview of what the process will be, what it is to have the tax mapping, and how it might fit in or work best in a workflow, both for the bookkeeping process and the tax preparation process. So we do have the open windows open at this point. You can go to the view dropdown, open windows in order to do that. We're now going to go to the chart of accounts by going to the lists dropdown, chart of accounts. This chart of accounts is what's going to be used to be building the balance sheet and income statement, which are the major tools that will typically be used in order to generate the tax return, whether that be for a sole proprietorship Schedule C return, or something, a corporation like a limited liability company, or a S corporation, or a partnership. Same kind of process here. We'd have the chart of accounts. Those would be used to make the financial statements. Financial statements generally used as the building blocks or starting point to do the data input for the tax preparation. Now, when you get this chart of accounts, most people will set up the chart of accounts based on the industry that they have told QuickBooks that they are in and the type of entity they are, whether that be sole proprietorships, S corporation, partnership, and so on and so forth. And that chart of account will already be set up and have both the account types be set up, and it'll also have the tax mapping type set up as well. So in other words, even if you haven't been working with the tax mapping feature, you've just kind of been ignoring that, you probably have a substantial amount of accounts, at least the ones that came when you started the company file, that are already mapped out because they were mapped out as a default setting when they were set up by QuickBooks when the company file was started. So let's take a look at that mapping here. If I go to account, you can either right click on it and edit, or you can go onto the rise up and edit the account. And then we have the name up top. Now this is where it's going to be mapped on the financial statements as an expense on the income statement in this case. The name, sub-account, description, and then down here below, this is the tax mapping line. Now most people basically ignore this line, and it's probably okay most of the time that this line is being ignored, but this is mapping it if you were to import this information from the QuickBooks to the tax software. This is the line that would help you do that. Now I say that normally many people don't actually pay much attention to this line, and normally it probably doesn't really matter because when you do the tax preparation process, unless you have software that you're using and you're using a system that will be utilizing this mapping system, then it's not going to be really relevant. And so, but if you have a system set up where you're working with tax software where you can import this in, and you have a system set up that you know how to do it well, then it can save time on the data input. So this is something, in my opinion, in my experience, I've worked at many different, or multiple at least, tax preparation places, CPA firms and whatnot. I've never seen this really being utilized really effectively, but I think it's always been something that's had potential to be utilized really effectively. And if you set up the proper system for it, at least for some clients, or maybe yourself, right? If you're doing this, then you can basically set up a system that could be beneficial and save time to do. So how would that system look like? Well, typically, in order to make this work, you need to be able to import it to the tax software. So then you would probably want to start with the tax software. The easiest way to make sure that would be applicable is start off with a tax software or work with an accounting firm that is using a tax software. If you're the bookkeeper and you're lining this up with a tax preparation, get acquainted with and do the networking with tax preparation places that utilize software that's owned by Intuit, and then you might be able to convince them or work with them to do this, to set up this process, which could save both people basically time. So the large software that's owned by Intuit is called Lacerte. So Lacerte is a tax software. It's a very good tax software. It's a fairly expensive tax software. Therefore, that is owned by Intuit, and it does allow you to import the data from QuickBooks to Lacerte. So that means that the mapping that would be showed up there would flow through to the Lacerte program. They also own TurboTax, which is something that's going to be a cheaper software that's used for individual tax filing. So if you're just doing your own taxes, then you might be able to map it to the TurboTax. I haven't looked into that in depth. Maybe I'll look into that in the future, but you might be able to link it there because, again, they're owned by the same company. So that could be another system that you can use. We'll be testing it out here with the Lacerte program and importing the data into the Lacerte program. Now, if you have a small company, such as like a Schedule C type of company, it's not a very detailed Schedule C, I think that's where the data input could be easier to do, because then you can map this thing out and import the information for a relatively small tax return and be able to make the adjustments. If you have a larger tax return, like an S corporation or an LLC or something like that, then it can be a little bit more detailed because you probably have more tax adjustments that you need to do, like M1 adjustments and Schedule K adjustments and whatnot. And those can be a little bit more complicated to map. And that's why a lot of times, like external software, I still like just doing it in Excel, because you can see that, you can see it very, very clearly in Excel. So let me just look at the process. Normally what would happen in the tax preparation process is you would take your financial statements, or you take your information from QuickBooks, provide it to the CPA, or do it yourself at the end of the year, and then typically take your trial balance and put it into some software such as Excel. So I would take my trial balance as of the end of the year and put it into like Excel typically, and work with a worksheet that would look basically like this. I'm going to hide some cells, where we'd have the unadjusted, like if I got this from a client, I'd have the unadjusted trial balance. Then I'd make any adjustments we need to make to it to make what I feel the books to be correct as of at this point in time. Now, again, you may not need to do that, and you may do any adjustments if you're doing it yourself in the actual software. So you may not have any period in adjustments, so you might not need to adjust the books in order to do that. If you do adjust the books, if you're working in an accounting firm, you may still like to do it in an Excel sheet. I still like to do it in an Excel sheet so I can see the journal entries. I think this is the most transparent way to see these items, although you can do this as well in the tax software. I would do it outside, and then I would plug that information into the tax software so that then the tax data is lined up exactly for it's correct on a book basis, in other words. And then once you have it set up in QuickBooks that it's up to date on a book basis, I'm going to unhide these cells. The other half of this worksheet, I'm going to hide these cells, would be the tax adjustments, any adjustments you have to make from the book items to get to the tax items. Now, if you're just doing a Schedule C, like a small company file, then there probably aren't many adjustments down here you have to do. All you really need is the income statement to upload, and that's why I think it could work quite well to just link the thing up and save you some data input with regards to a small Schedule C item. But if it's a larger company file, and if it's like an S corporation or something like that, you might have a lot more adjustments that you need to do that are going to be differentiations between the tax and the book. For example, like depreciation is often different between the tax and the books and whatnot. Meals, if you have meals, you have to do the 50% thing and whatnot. So you might have some of these adjustments that you're going to be putting into place. Now, you can do that in the Lacerte tax software once you upload it, but it's just not as easy to work with in the Lacerte to go back and forth and enter it in the Lacerte tax software. So what I would do then is do the adjustments in Excel here, still do my normal process, then import it to Lacerte, import the trial balance that was the adjusted trial balance, the book numbers, and then make my adjustments, any adjustments that I need to still be putting into place to line up. So I can line it up. I can use my worksheet here as a double check, and then it could save me time in data inputting. In other words, I would data input the adjusted numbers here and then work it out in Excel and just double check it and see if I can then enter those adjustments into the system. So let's just check it out in Lacerte. If I went over to Lacerte here. Now so here we are in the tax software. This is for an S corporation. It might be easier to do for a sole proprietorship, and we'll take a look at an example of that. But for now, let's just think about a system or a bit more complex return, like an S corporation type of return. We have this trial balance area, which is where you would then do the importing. So you can import to this trial balance section, which looks like this, and then you can kind of map this back to the data input points on the tax return. So if you can get all the stuff into this trial balance just uploaded properly and mapped to the correct data input, it could save a lot of time in the data input. The problem is doing the adjustments from this screen how many adjustments do you do and how complex is that going to be? And I don't think it's quite as easy to do adjustments here as it would be in, say, an Excel software. So that's why so here's what it looks like. You can import it here. You can hit the drop down and we can import the QuickBooks file or an Excel file. So you might think, why don't I just export it to Excel, make any adjustments, and then import it here? You can't really do that as easily, because when it comes from Excel, you don't have the mapping. You don't have the tax mapping. That's the whole point. So we want to import it directly here from QuickBooks, which is why I would then export it to Excel and do any kind of adjustments that I want to do for the book side of things. Make sure to enter those adjustments into the QuickBooks file so the QuickBooks file is correct as of that point in time, then import it directly from the QuickBooks file when the book numbers are completely correct, and then we just deal with any kind of tax adjustments we need to make within Lacerte, which we can then double check to to our Excel file if we so choose, if we need that double checking. You might not need that double checking if you're doing like a small return, or if you're comfortable working within this trial balance. The reason I like working into Excel, because it's just more comfortable for me to make adjustments over there. It's easier to do, in my opinion. So on this side, then we have the account, we have the type, we have the prior period. If we had the prior period, we have the unadjusted books, the adjustments, and the adjusted books, and then the tax adjustments. You'll note that this worksheet looks a lot like our worksheet here. If I unhide the columns, we have the unadjusted trial balance, adjustments, adjusted trial balance. Now, you'd only need these 3 columns if you needed to make adjustments to the numbers that were in QuickBooks. And if you don't, then you don't need these columns, right? You can just import it directly from QuickBooks and then just worry about the tax adjustments. So if you need to make these adjustments, I would recommend making them in QuickBooks or doing them in Excel and then entering the journal entries into QuickBooks so that your book numbers are correct. Then I can hide these columns, say I'm not worried about these columns, and then when I go back over to Lacerte, I would do the same thing. And note these numbers aren't exactly the same as on the Excel worksheet, just an example here. So I can edit the columns down here, column options. I can go to the show columns, and then I can say I don't really need to see the prior year tax. I don't need the unadjusted items or the debits and credits related to them. I'm going to say OK. And so now I have the type, the book, and then just the tax adjustments that I need to be making. So everything I would like at this point when I import it from QuickBooks to be correct on a book basis. And if it's not, I adjust QuickBooks, not the tax software. And then I would import it from QuickBooks to here. And then any adjustments we need to make for the tax side of things, we would make here, in essence, working on this side of our worksheet, just doing tax adjustments. Now, if you have a small Schedule C type of return, you might not have too many tax adjustments. Easy, you just do your process and go forward. If you have more tax adjustments, then some of these line items will kind of map itself, because they'll be able to determine what type of adjustments you need based on the information that would be data input. I like double checking it if it's a complex return in Excel, so I can figure out what's happening, because oftentimes you won't be in balance because something will be missing. So I still need to do it over here, but then it can save a lot of just the data input to get this information in directly in there, and then make the adjustments you need. Now you can do then journal entries if you need to enter journal entries here, or tax journal entries in our case at this point. You can also go to this tab, which is the important tab that's assigning the line items to the tax return. So these are all mapping then to the tax return. And they're all, look how nicely they all map out, and the red ones are not mapping out. And they map out because of the data input that got taken directly from QuickBooks. And if anything is not mapping out, then you can go to this item here, and it gives you like a screen on where it should go, and then you can find it and put it into that screen. So this is where it saves time in this data input. Now, I don't think a lot of times the mapping will not completely be there, and sometimes you're going to have some adjustments if it's more complex return that you'll have to still make. But you won't have to do all that initial data input. That's where the time can basically be saved. For example, this one doesn't really map out clearly because it's a distribution. But in any case, then once this is input, if you take a look at Lacerte, like I open the data input here and I go to the deductions are input and they're black, and that means that they got input. If they were blue, if I enter something like here, it's blue. That means I did the input. If it's black, it means it took it from somewhere. In this case, it took it from the data input that we imported directly from QuickBooks. So all this stuff is stuff that just came directly from QuickBooks, and it just worked out the entire thing, which that could save a lot of time. Obviously, the problem is when these things don't line up, when something doesn't line up, then you still got to kind of figure out what didn't pull over correctly or what kind of adjustments need to be made. If it's an S corporation, it's usually the M1 adjustments and the Schedule K adjustments that become difficult. So here on this one, it's a Schedule K. So the things that I still had to kind of go in, and these actually pulled in, these Schedule K adjustments pulled in nicely. And then we had the, I entered one that didn't have a whole lot of M1 adjustments. So we might test it a little bit more thoroughly, but it ties out here. And the only thing I basically had to do was reassign a couple line items that weren't pulling over properly. And then I had to do the distributions to the shareholders, and everything else pulled over pretty good. So basically the bottom line is that if you have a system where you're a bookkeeper and you work with an accounting firm that uses Lacerte or some tax software that allows you to import from QuickBooks to the Lacerte system, they may have a system in place where they're utilizing that import feature, which can be useful, or you might convince them to do that, because they might be able to pick something up that'll be easier to do that. If they're using Lacerte, they may not be importing from QuickBooks, and if you have certain types of returns and you're like, I can help you out and make this a little bit easier, it might be worth working with a CPA firm to do that. If you have TurboTax, you may be able to import your own data there. I think the best system to do personally is to make any adjustments you need to be making in the QuickBooks file, whether that's done by an outside CPA firm with other software, and then you enter the data into QuickBooks so your books are correct in QuickBooks on a book basis, then export the data, and then you can make any adjustments that need to be made. So we'll take a look at that in a bit more detail in future presentations.